Hi, everyone, and thank you all so much for taking the time out of your day to join us for our webinar. My name is Megan Santangelo, and today we are joined by two of our YouLend partners, Travis Starkey, who's Manager of Strategic Partnerships, and Matthias Soberg, who's VP of U.S. Operations for YouLend, as they discuss the EPI and YouLend partnership, some product insights, and how our merchant lending program can help your office grow. So, Matthias, Travis, thank you both so much for joining us today and taking the time out. And I'll hand this over to you and we can jump right in. For anyone who has questions, real quick, just enter them into the chat and Q&A and we will address those for you. And if you're joining us on the phone lines, if you press *9, you'll be able to raise your hand and we can unmute you at the close of the presentation. So thank you all.
Awesome. Thanks so much, Megan. And thanks to Megan, Amber, and team for inviting us to chat with you all today. So again, I'm Travis Starkey. As Megan mentioned, I lead our strategic partnerships here for the US. And Matthias, who's calling in with me today, he runs our overall US operations. And we're here to share a bit about where we've been with electronic payments to get working together to make it possible for the SMBs who use electronic payments to access more funding, to talk about that journey, to talk about why we believe it's important and how we offer it, and then what your role as ISOs, agents, resellers, et cetera, is in helping to make this accessible to the many merchants that use EPI. Before we get into it, I do want to say that we will be at Impact. If you have not signed up yet, please be sure to do so. Matthias is going to make the trip out to Las Vegas along with our sales director, Nick, and they will be there to chat with you all and of course everyone else at the conference to make sure everyone is who wants to know more about what YouLend does is able to speak with some folks in the flesh, right, and have those conversations one-on-one. So be sure to look for us there. Send Matthias an email if you if you'd like to arrange time to chat with him. And then, of course, I have to say this for Amber, if you have not signed up yet, if you have not registered yet, there is still time to do it. ImpactEPI.com is where you need to go. So with that, there are three things that I would like for us to focus on today. And I'd like us to take a look at kind of where we've been with electronic payments together with YouLend, talk about what YouLend funding is, and then how to share this opportunity with merchants. We overall, YouLend as a global entity have serviced about 200,000 SMBs globally. And we firmly believe that there's an accessibility and affordability issue that is within the kind of the owner experience. And we seek to conscientiously and directly address that with the solution that we offer. And we've had a terrific start here with EPI. So we got started last November. And in that time, we have funded 130 or provided 134 fundings to over 100 merchants who are using electronic payments as a PSP. The overall, that's meant that about 3.6 million in lending has been extended to merchants, and the average for those fundings is about 27,000. The thing to call out here is that oftentimes we see at about an 80% rate, someone who takes an initial funding as they continue to grow will take a renewal of that funding, and that behavior is reflected in the average. So the initial funding average is 25,000, but the renewal average is 33,000. So we are offering funding to merchants who have a stated purpose for that funding to grow their business in whatever way is relevant, given the moment that their business is in. And when folks come back to us, we look at that track record of growth and we're able to further extend, typically at a higher average, what they would be able to receive with a renewal. And it's really exciting to see that reflected here. Any questions about that before I move on to our second section? Okay, and feel free to throw those questions, like Megan said, into the Q&A, into the chat, so that so that we can answer them directly. So as I alluded to earlier, we think that there are a few different lending related issues that SMB owners tend to bump up against on a regular basis. It's difficult for them to get finance just basically as a task. It's hard to marshal the necessary resources to get the funding in the first place. The approval rate is low for SMBs when it comes to bank financing. It averages out to about 14%. Most SMBs say that they are not getting the necessary services that they need from traditional banks, and SMBs tend to have pretty low cash reserves available to them because that cash is tied up in other parts of operating their businesses. This is a layered problem. It's a multifaceted problem, and we seek to carefully address it and directly address it with the merchants who are using electronic payments by offering our lending instrument to them. So I'd like to outline just what a YouLend funding is. So YouLend offers a merchant cash advance product to merchants who use the electronic payments platform. And these funding sizes can vary. We're looking at banking statements, we're looking at revenue. We want to right size a lending for the moment that the business is in, but there's a broad range of funding sizes, and they typically average to about 1 to 2x of monthly revenue. We take repayments as agreed as a percentage of daily revenue, and that's non-cash revenue that we are taking a look at when we're collecting repayment. It's a fixed fee, and merchants repay within 3 to 9 months. Some are like pretty quick with it, and others take a little bit longer. But that range of time, it's really done according to what their sales numbers are and what we're able to collect over time. And we work with merchants to achieve that. And the last piece of it is, so renewals are also able to be processed very quickly. So once a merchant is over 50% repaid, that renewal opportunity is something that's easily serviced by our team. And because we've gotten to know the business, and so we can quickly account for that. The notes that come back to us about why merchants love YouLend is, so it's affordable. It's based on a fixed percentage of their card takings. So when sales happen, that's when we see repayment. Our decisioning is quick and the payout is quick. So we have developed a pretty substantial engine on our side to make sure that smart decisions are made on a pretty quick turnaround of basis, about 24 hours. And funding is also available quickly, typically the same day the contracts are signed, if not the day after. We're also able to enable merchants to access additional funding. So as I mentioned previously, 80% of merchants that take out YouLend funding become repeat customers, meaning that they take out at least one more funding for their business. We think that we are targeting a part of the market that is underserved, and that is, in addition to just the ease of use, is a part of why we are seeing these renewal rates. And lastly, we are a trusted provider. We think that showing up in the market with integrity, making sure that the customer service experience for merchants is top-notch, the account management experience is top-notch, we take all of that seriously. We've got 25 folks in our Atlanta office who are totally focused on that work across ops, credit decisioning, and account management. And we see evidence of that in our Trustpilot rating. And when it comes to your piece of it, whether you're an ISO, agent, reseller, however you're situated in this ecosystem, the way we think about this for you all is this is a net new revenue stream for you. So this is an additional renewable product for your merchant base. It's one that already has demonstrated fit with the merchants that you are serving. And we can easily determine with them whether it makes sense for us to provide them a funding. The process is also simple. So this is not going to be something where you are filling out paperwork for a merchant. Your primary responsibility is to refer them to our shared EPI Capital YouLend landing page, which of course will be sent after the presentation. But that is your piece of it, is to direct them to that, and then we will handle and monitor the rest. And of course, perhaps an obvious point here, but if someone has received a funding by virtue of this relationship that we have with electronic payments, that means overall, as we've seen across other partnerships that have been standing for much longer than ours with EPI has, is that the merchants are more likely to stick around with their PSP, the PSP that helped them secure this funding. So it's a nice layered offering. And so what we often see is 80 to 85% of merchants will renew. Resellers, agents, ISOs receive 50% of commission on initial fundings and renewals. So both of those will show up in your residuals. And then the churn rate, so thinking about the churn rate with their usage of electronic payments, we see across all of our partners that merchants who take a YouLend funding, they are less likely to churn by about 50 to 75% from the payment platform because than their peers are. So we see that rate also lower, and we think that that's because we're providing a sort of all-inclusive experience hand in hand with a PSP. And that is, that's incredibly important to us to see numbers like this. This is, let's see, yeah, okay. Let's see, let's stop for a second. And Matthias, do you want to speak to Izzy's question real quick? Or Amber, I see you're typing if you want to handle that.
Yeah, I can take that. Easy. I think it's a super good question. The answer is absolutely. So when we underwrite businesses, it's not a requirement for us that they are actively transacting with electronic payments. The only requirement we have is they, as a business, must have accepted card payments for at least 3 months prior to making an application. So as long as they've accepted card payments for 3 months or longer, we can review and provide a decision for that business. So I think we have a lot of other partners and agents that use it as like a tool to onboard merchants. So I think it's a great idea.
Thank you, Matthias. Also, to expand upon that, if you do have a merchant who is not processing with electronic payments, you'll just have to give us a heads up on the cash advance so you can ensure that you have received the residual through EPI. Since they're not an EPI merchant, we won't have the information in our database. So we'll just need a heads up from you.
That's a great point. Thanks to you both. When a merchant receives their offer, this is what they see. They will see two, typically three different offers that we believe are most suitable for them given what they have qualified for, what they have requested, and then ultimately up to them what they need. And you can see here different levels of funding and different levels of repayment based on the funding amount. We want to make sure that this level of agency is offered to merchants because ultimately it's in their hands what is going to make the most sense. You might have qualified for 10,000, but ultimately you only need 5,500. We want to make sure that that flexibility is a part of their experience, and it's reflected in a screen that looks very much like this when a merchant goes through our portal. The minimum requirements for someone to take a funding with YouLend is they have to have at least one business owner living in the US. They, as Matthias mentioned, 3-month sales, card revenue, non-cash revenue has to be present. We want to see at least $1,000 monthly processing volume, and we want to see at least a 500 credit score or better. As you might have guessed, we are looking at several different sources of data when we determine whether or not it's suitable for someone to receive a funding. Credit is one of those, of course, but we are looking at multiple sources because we want to make sure that we fully understand the credit worthiness and the lendability of the merchant. And the merchant cannot be in a YouLend prohibited industry. So thinking about adult entertainment, nightclubs, gambling, used car sales, or firearms. So when it comes to the timeline, the initial process, as I alluded to earlier, is they submit via our website. Our credit decisioning team will make sure that they have what they need to qualify someone. They might ask for additional paperwork. It might be KYC, might be other documentation to make sure that we have a full perspective of someone as a potential funding. The contract is extended, and then within really as quickly as the merchant would like to move forward, we set up direct debit ACH with them, and then they are funded. So we've had same day fundings, of course. Some merchants, the merchants who are at the size of funding that we see here in that kind of $25,000 to $30,000 neighborhood, they might be same day, they might take longer than that. It just is going to be up to them what makes the most sense. But we want to make sure that they have their questions answered and they have what they need to make a smart decision. And so very often our team in Atlanta will be involved in that conversation to make sure that they fully understand what is happening and that there's just no confusion about what we offer and the repayment timelines and all that good stuff. The renewal is a bit simpler. They will receive a notification from us after they get past a certain point of their repayment. And then also when they are finished repaying, that lets them know that they qualify for a renewal. We will re-review their account to see what they qualify for at that particular point in time. If it's 6 months down the road, it looks different, of course, than if they have maybe paid up 90% of their initial funding. But the bottom line for us is that we re-review the account, make sure that we are offering this funding based on what is truly suitable in the moment, and then offer a contract and funding based on that. Let's see. So seeing a couple questions in the Q&A. Matthias, do you want to address Izzy's question about the average cost of repayment?
Yeah, for sure. Izzy, another good question. So what we do is risk-based pricing. So the pricing that we'll offer to a given merchant depends on like the quality of the merchant that we deem when we underwrite the business. I'd say as a rule of thumb, it ranges anywhere from 6% as a one-time fixed fee up to around 25%. And where you land on that scale again depends on the underwriting that we do on the business. I think we have a great example with you guys of a large business that's taking a couple of fundings for more than 100,000, and typically the fee has been single digits on those fundings. So that's a good example of us extending affordable financing to businesses. Oh, sorry, Travis.
Well, no, do you want to also answer Paul's question about the existing MCA with another provider?
Yeah, for sure. So Paul, what we do there is we can certainly buy out other lenders. The rule we have in place for that is the existing balance with the current lender that we're looking to buy out cannot be greater than 50% of the amount that we've approved the business for. So I think to give an example, let's say someone owes Toast 50,000 and they're approved for 100,000 with us. In that case, we could buy out Toast and we would pay them off, and then they would repay with us instead. If that balance was 60,000, so 60% of what we've approved them for, we wouldn't be able to do the buyout straight away. Instead, we'd approve the business subject to paying off another 10,000 with Toast. But the short answer is we can absolutely do it.
That's great. Thank you, Matthias. So the last piece of this that I would like to bring up for all of us is how we talk about EPI Capital, how we talk about YouLend to merchants. And this has covered what I assume is pretty well-trodden ground for you all, which is having smart, targeted conversations with merchants about using a product that's potentially very useful to them. So, don't take the suggestions here necessarily as a script, but what we encourage everyone to do is to engage in conversation with merchants about how they are trying to grow their business. And what are their plans the next 3, 6, 12 months? Are they going to is their restaurant going to open a second location? What are their real aspirations here? And are they putting the systems in place to make those goals a reality? And that's where we want to be allocating resources. So, having a conversation about what might help them, whether additional funding would help them take advantage of maybe like moving into a new space or acquiring a new widget that would grow their business, having a extra supply for extra inventory for a busy season. That's where we see the most utility of our MCA. But the most important thing to us is that we are addressing a stated immediate need of the merchant. And that's typically something that comes up in conversation. What do you really want here? What are you really trying to accomplish? And where there is alignment between someone's aspirations and their need for funding and what we can offer, that's, that overlap is where we like to spend our time. And just to reiterate, the unique selling points to highlight, of course, is that the application is smooth and straightforward. The capital is remitted to them very quickly after their application goes through our decisioning engine. The repayments are flexible, as Matthias mentioned earlier. It's a risk-based decision on our part, and that could be single digits up to low double digits. What the percentage is that we ask of daily sales volume, that's we try to make the most like the fairest and the smartest decisions we can there. And it's a one-time fee, so once it's set, it doesn't change, and it's based off of the revenue that they're collecting on a weekly or daily basis, depending on the scale of the account. So that's all I've got for formal slides. We'd love to open up the floor and make sure that we're addressing any questions that are outstanding, anything that you would like for us to revisit, in case there is any curiosity about other parts that we could talk about.
I can kick off with the easiest question. So it doesn't matter what the terminal or gateway the merchant uses, and the way we collect repayments is via direct debit. I think the nice thing about that is we are acquirer agnostic, and again, that just allows us to take repayments even if they're not using electronic payments yet.
All great questions, guys. Feel free to enter any additionals into the chat and Q&A, and Travis and Matthias can address them. Also, if you're joining us on the phone line and don't have access to the chat, if you press *9, it will raise your hand and we can manually unmute you from our end. And I would just like to draw attention for our agents on the ISO interface under the marketing tab. We do have a EPI Capital flyer, and we also have an agent-facing FAQ for the program. And we can certainly brand that flyer for you. Just reach out to marketing at marketing@electronicpayments.com.
And I think one thing to flag from our side, if you guys need any support or have any questions in regards to the program, I'll share the phone number for our sales team after. Feel free to just call them and ask any questions that you have. Ultimately, we're here to support you all and empower you to sell the program. So happy to help. There's a question from JJ, why would you only be able to repay 50% of a buyout from a different provider? I think that's a very good question, and something I typically bring up with our risk team. It's just a risk decision from our side, where our risk team have said that the threshold is 50%. Now, again, we do risk-based pricing, so I think if we were to get an application that looks super strong, and the outstanding balance is slightly higher than 50%, we may do an exception. The 50% is just the general rule of thumb and the threshold that we try to stick to. How much is average commission from Paul? So Paul, the commission is calculated as a percentage of the difference between the amount we fund a merchant and the amount that merchant has to repay. So what that means for you as an ISO is the larger the funding, the larger the fee will also be as a rule of thumb, because there's more money where they have to pay the fee on, and thus the larger the commission will be. I think average deal size for electronic payments so far has been around 25,000. So I believe commission on that, on average for you guys as the agents, would be around $500. But that was math done at the top of my head, which I'm not very good at, so don't quote me on that. I see Brian has a question in regards to. So Brian, the commission we pay to electronic payments is 20% of the margin, and the margin is the difference again between the repayment amount and the funded amount. So if we take an example, we fund someone 100,000, total repayment amount is 120,000. Then the fee there is 20,000. We pay electronic payments 20% of that, so 4,000. And then 50% of that 4,000 would go to you as the agent on the funding. Andy, will the merchant be submitted by email, or will there be a portal to make the process more easy? So we have a portal where merchants can finish the application. It's a super simple, short application journey they have to do. All the information we require is basic information on the company, basic information on them as the owner of the business, and then either 3 months bank statements or a link to open banking. We did some testing last year, and I think on average it takes merchants roughly 2 minutes to complete the application. So I think it's fair to say that it's very simple to do. Leah has a question in regards to like how we differentiate ourselves against competitors in the market. So I think Travis touched a bit on it in one of his slides, but I think the key points where we're different from a lot of competitors in the market is one, ease of application. Here it's both, like what we mean by this is both like how easy it is to submit the application, but then it's also quite rare that we ask for follow-up documentation. So overall, it's very easy for merchants to apply. I think second piece is speed of payout. So as Travis mentioned, funding is available same day as you sign contracts. So typically when Amber and her team sends out the email communication marketing the product to the merchant base, we see fundings happen same day as a marketing goes out. So it's super fast. I think the other two areas where we differentiate ourselves is our credit criteria. So I think we built, and we've been doing this for many years now. And what that has allowed us to do is we have a lot of data. And what that means is our credit models are very strong. So our approval rate is typically quite significantly higher compared to many MCA providers in the US. I think our benchmark is 80 to 85% of the merchants that apply should also go on to get approved. So that's significantly higher. And then I think the final piece that ties into that is typically our pricing is also very competitive. So Leah, I know that was quite a long answer. Let me know if it didn't make sense, or if you have any follow-up questions. Ken is asking if you can cold call a merchant with YouLend funding as a strategy to capture that processing in the future. Yeah, for sure. Again, a lot of the PSPs we work with who engage their agents, they use it as like what we call a front book acquiring strategy. So they use it as a selling point to, in the short term, earn some commission on the funding, but then with the view of longer term getting them on board electronic payments to process payments as well. So yes, for sure. And then Andy is asking, where do we get the portal link from? Amber, if you're okay to send it out to the list. I don't have the emails of all the attendees, but that would be great if you could share it after.
Yeah, so we don't actually have an agent portal link for EPI Capital, but we can certainly share the application link.
Sorry, I misunderstood the question. That's right. And I think if any of you want to have an update on any of the applications, instead you can call our sales team and we're happy to give you the update on the go.
And of course, ISO support is available to assist as well with answering any questions pertaining to lending accounts, status and funding, and residual commissions. And then in the chat, we just shared the page where the landing page where merchants can apply. So if you want to go through the process and just see how easy it is for yourself, it's pretty seamless and intuitive.
I think, Amber, that's probably a question for you in terms of who gets the account. But from a YouLend point of view, we'd still pay the commission to electronic payments, as long as you're the ones who passed us the lead.
Yeah, so the question is, if we get a loan for a merchant that isn't processing through EPI, and in the time they call EPI to switch processing to EPI, does the agent ISO get the account? Yes, because I mean, I would imagine so, Leticia, because you are the primary contact in establishing that initial advance. So if they were to switch processing to EPI, that would probably be through you if you've established the relationship. Now, if it's a situation where there is, you have a YouLend merchant, an EPI Capital merchant that has an open advance through EPI Capital, but another EPI agent brings on that merchant. They've actively then at that point set up the account, set up their equipment and or gateway, and that merchant would then be processing. So that's just a really great example as to why it's important to continue the relationship and continue having conversations with merchants and continuing to upsell. So EPI Capital is a great way, of course, to get your foot in the door, get merchants that upfront cash, working capital that they may need. And then in time, hopefully they'll continue to renew and maybe even switch with you as switch their processing to you into EPI. Hopefully that answers your question, Leticia. And if you want to talk strategy or ways that may work in your favor, feel free to reach out.
And can Amber send the link in the webinar chat? Let me know if you can't see it.
And just to answer Ryan's question, the presentation is being recorded and we'll send out a copy to you along with the deck. And then Ryan, the marketing material is located on the ISO interface. If you click on marketing and then you click sales materials, general flyers. But you can reach out if you email marketing@electronicpayments.com and I can send the flyer along to you as well.
Okay, well, let's give maybe another minute or two in case there are any lingering questions. I want to make sure that we address them. But first of all, great questions. Thank you, everyone. We wanted to be clear how all of this works, that you have what you need to be including this in conversations with merchants where appropriate in your outbound, wherever you think it's smart to place it. And yeah, we also hope to see y'all at Impact here at the beginning of October. As I mentioned before, Matthias and our sales lead Nick will be out there, and happy to chat and give you more of an idea of how this has been working for merchants both within EPI and beyond, and how we can continue to grow their businesses here in the US.
Yeah, looking forward to hopefully meeting many of you guys. Has this program been successful with the dental and medical offices? Oh, did you want to answer that? Otherwise, I can take it. Or you might just have marked it. No, sorry about that. Yes, Izzy. I think one of the interesting things we've seen, again, because we can take payments from any source as long as it's card payments, is that it actually works very well for a lot of industries. We see a lot of hospitality, we see a lot of e-commerce, but we also see a lot of accountants, for example, or dental and medical services, or even construction companies. I think the short answer is yes, it can definitely be successful, and we funded quite a lot of dental and medical offices, both in the US but also in UK and Europe.
All great questions, guys. Any additionals? Feel free to pop them into the chat QA. As I said earlier, you could also hit *9 if you'd like to speak. And just to reiterate, we will be sending out a recording of this presentation for all of you, and I'll make a note to send along the YouLend flyer as well, just so you have it readily available.
Fantastic. And I've also just dropped my email in the chat. If you have any questions that come up, after this or over the next couple of weeks, please just ping me an email. I'm more than happy to help you guys.
And thank you to Amber and to Megan for hosting us and making this possible. So thank you.
Thank you both for hosting. Great presentation, and really looking forward to seeing you all at Impact.
Likewise.
Same here, everyone. Thank you, Matthias. Thank you, Travis, so much for all of your help today. I hope that you all found this informative, helpful, and like I said, we'll follow up. We will send you the recording. I will pass along the flyer. If that's something that you'd like to co-brand, you can just shoot me an email right back. And lastly, one last shameless plug. This Thursday on September 12th, at noon, we're having our next POS roundtable discussion with Ryan Chrisman, and we'll be discussing the reasons a point-of-sale system can help a business make more money. So I will send out an email reminder to all of our agents, and we hope that you can make the time to join us. So once again, thank you all so much for your help, and have a great day, everyone.
Thanks,
Thank
everybody.
you.
Thank you. Take care.
Thanks, you too. Have a great day.